here it says in percentage method for federal, it says how you do it, but this is not clear, obviously, so it's better to have an example to understand it. And I put here as updated as 3321, so I can kind of remember when was the last time it was updated. So let's assume that same fact as with the tables above, which whatever it was, we go back to that later on. Now we are using the percentage method. So let's do the percentage method, and then we go to table above the previous page to see how was the table, and then we compare it together. Anyway, using tables, I did it here one more time myself. So that's just comparison. But since I did it here myself, we will go back on the previous page to see how was the previous page, because that came from previous instructor. So we go to IRS website, publication 15, which I believe I have it in here. And it says jump to page 57. And why we jump to page 57? Because if you click this and you go all the way to the beginning of publication 15T, which is tables. So we want to do percentage method for older W4. Okay, so percentage method for here, percentage method for older W4, 2019 or earlier. So that's why we jump to page 57. Okay, so let's look at this right now. It says percentage method, manual payroll system, 2019 or earlier. And as you see, it says, it gives you a set of tables, says annually, semi-annually, quarterly, monthly. So depends what you have. You have set of dollar amounts. And remember, the older W4, they have allowances. The newer W4, they don't have allowance. You just say how many dependents I have. That's about it. For every dependence, you get $2,000 tax credit. But the older W4s, you have allowances. Let's say 5 allowances, 3 allowances, 2 allowances, whichever you declare in your form W4. So in step 1, looks like you adjust the employee's wage amount. And in that adjustment, it says, let's say number 1, enter the employee's total taxable wage this payroll period. Whatever the taxable wage is for that payroll period, you enter it right there. Enter the number of allowances claimed on the employee's most recent W4, whatever, let's say 5, 3. Multiply line B by that amount of table 6. So depends, you are monthly payroll, you are quarterly payroll, semi-monthly, weekly, what? So whatever it is, you put it there, and then number of allowances multiply with that, it gives you a number. And then it says subtract line 1C from line 1A. If 0 or less, enter 0. This is the adjusted wage amount. So if your multiplication of number of allowances by one of these numbers is bigger than your total taxable wage, then the amount is 0. You don't have any taxable wage, so there is 0 withholding. But if your taxable wage is bigger than the allowances credit, then you will have an adjusted wage amount in 1D. So it depends what it is. So if you have an adjusted wage amount in 1D, a positive number, then you go ahead and continue to step 2. So let's look at the example here we have. Now it says in step 1, this person, it's a single with one allowance on an older W-4, and she makes $1,008 a week gross, and we want to see how much is the withholding for this employee. So we put the gross amount at the top. So I just copied that from the worksheet in here for you, so you kind of refer to it. Says what is 1,008? That is where we enter the employee's total taxable wages this pay period. So this wording exactly comes from here. So when I say 1A, you say, oh, what is 1A? 1A is that description, which I brought it for you right here so you can refer to it. And then it says, enter the number of allowances in 1B. Okay, so this is one allowance. We enter 1. And this is weekly, right? Where is it? A week here. It's a weekly. So if you look at the weekly, it says $83. Okay, $83 credit. So $83 from table 6 times 1 is 83. Minus 1,008, that gives you 925. So $925, step 1, taxable wages. Here. That's the taxable amount. Okay, now we have the taxable amount. We go to step 2. And step 2 says at least the amount in column A. In column A, we have an at least amount and maximum amount, so we want the at least amount. In page 58, weekly, because it's a weekly payroll, weekly pay and single. So let's see where this 855 is coming from. So now that step 1 is done, we go to step 2. Step 2 says, okay, go to the table and get that at least amount. Enter here the amount from column A of that row here. Okay, so let's go bottom. This is weekly and this is single. Okay, and the taxable wages was how much? 925? 850, yes, 925 right there. Okay, so look at 925, and I see 925 for a single person for a weekly pay period ends up to be in that area between 855 and 1737, right? So the at least is 855. And the tentative tax will be $89.66. $89.60. So Control C. So this is single. 855 is the at least amount and is $89.66. So let's go there. 855, 89.66. So let me fix this. $89.66. Okay. So far, so good? Any question, let me know, okay? So 22% is the tax rate. So if you look in here, you see the tax rate is 22%, which is the next row. Here says enter the amount from column C of that, no, enter the percentage from column D of that row. Enter the percentage from column D of that row, which is weekly 22%. 22% for what? Anything above the minimum. So up to 855, the tax is 89.66. But anything above 855, anything above the 855, will get 22% charge. So anything above 855. So what is above 855? The taxable wage is 925 minus 855. That's $70. $70 times 22%. That's additional $15.40 for whatever it's above 855. So now we have a standard $89.66. 89. Sorry, let me fix that. Standard $89.66. Tax, and let's calculate that. 89.66 plus 1540 includes equals to 105.06. 105.06. Okay, so far in step 2, the tax is 105.06. In step 3, is there any additional withholding? Sometimes employee asks for additional withholding. If it's not, then it will be 105.06. Just like that, percentage method. And step 3, if you look at step 3, that's what it is. Step 3 says, enter additional amount to withhold from line 6 of Form W4. Line 6 of Form W4. So if you look at the Form W4, the older version for W4, okay. This is the new version, but if you look at the older version of W4, you will see that it says additional withholding. So since there is no additional withholding, so the tax is 105.06. Any questions so far? Do you understand this, hopefully? Now, let's compare this to using tables. Using tables obviously is much easier. So if you call using tables, the amount was what, 106? So pretty much close, right? So let's use tables, see if it works or not. So let's go to 15T, go all the way top, manual payroll with forms, with form 2019 or earlier. So that's page 22. So in page 22, this is the worksheet again. It says enter the employee's taxable wages this payroll period. So you put that right there. And it says use the amount on line 1A to look up the tentative amount to withhold in the appropriate wage. So that's how much is the wage? Let's see. Wage was with one allowance and 1,008 a week, single. Okay. A week, so it's weekly, but not married. Okay, so let's go down. Married, no, keep going. Married, keep going. Single. And that's 1,008. Keep going down. Single, weekly, 1,008 here. Okay. With one allowance right there. So it's 106. And there's no additional withholding, so that will be obviously 106. Right there. Okay. Cool.
Yes.
Now let's go and do another one. So let's see which one we did. We did module 3, I believe. We did that one. Okay. So let's do this one. Now this is percentage method example, 2021, again, using the publication 15. But it's for a W-4 that has been issued in 2020 or after. Okay, so let's do that. In this example, it says, this is a new W-4. So what do? Again, you go to publication 15, but because it's a new W-4, it says jump to page 51. And this is a single again, has no kids, no dependent. She makes $1,008 a week. How much do you withhold? New W-4. Okay, so we go to publication 15. We go to new W-4, percentage method first, here. So we do it in here. Let's look at the problem one more time. Is this very similar to the previous one, right? Previous one was the older version W-4 with one allowance. And this one is a newer version W-4, same person with same income, and obviously no kids, so no dependent. So previously this ends up to be 8820. No, now it's based on new W-4 is 8820. So if I go to the previous problem, here, one allowance, she makes 1,008 a week. And we did it with the older W-4, and it was 105.06 using percentage method, 105.06. But now using the new W-4, instead of 105.06, ends up to be $88. So it, based on which W-4 we are using, the tax withholding will be a little bit different. 105 compared to $88. That's the way it is. So now we go through these steps again. So step one. In step one, it says, let's adjust employee's wage amount. You adjust employee's wage amount based on step 4 information in the W-4. Okay, what is step 4 information in W4 anyway? So this is a new W4. And step 4 of W4, it's right in the bottom, right there. There are a few things that might needs to be added to the income or deducted from income. Here says, if you have other type of job, any other income, then it's better to add it here because you have more income. That means you have to, withhold more taxes. So you add it. However, it says, if you have any type of deductions, based on a worksheet on page 3 of this W4. These deductions, it says, let's say you, instead of using standard deduction, you are itemizing it and in your tax return. And you might, because you are itemizing, maybe your itemized deductions are very large. So based on that, you go to this worksheet and you might figure out that because your itemized deduction in your personal tax return might be a little bit more than standard deduction, it's better to reduce a few dollars from your income for the calculation. But in general, it's a very good idea not to deduct anything, even though if you do itemized deduction. So I suggest always do nothing on this part. Extra withholding, that's your choice. Maybe you say, I am one of those guys that always spend my money, so I want to have extra withholding. So when I file my taxes, I have a big refund and I get very excited. And maybe with that big refund, I can buy a car or something for myself. So that's the idea. So
Professor?
Yes.
So I changed jobs last year, and this is where everything for me became really messed up. So if you just put on step 3, if I had any kids, I would put, 2,000 there. And then if I had another on step 3.
How many kids?
One kid. Well, no, I only have one dependent.
Oh, okay. So 2,000, yes.
But my dependent is over 18, so it would only be 500, right?
Yeah.
Okay,
yeah,
so
just for under 17.
Right.
Yeah.
So I put 500 there, and based on that, and based on I don't have another job, I don't have any other deductions, and my extra, I shouldn't have to fill out for A through C, correct?
No. I suggest definitely don't do anything for B. If you are making money from somewhere else, let's say from Uber or whatever,
right?
You make $1,000 a month from there. Okay, put that $1,000 there. Other than that, just leave it. If you like to have additional withholding, again, put something there. Otherwise, just leave it blank.
Okay.
So assuming that, let's say, you don't have any of those, so you leave number 4 blank totally. So if your number 4 is blank totally, then in here that you are adjusting your employee wages, technically it will be useless, doing nothing. So no adjustment, technically, no adjustment.
Right, okay.
If you have anything, then you have to follow these steps to add a little bit or to deduct a little bit. But for now, you just do not. But let's say you want to add something. Let's say you want additional withholding, which was here. Let's say C, you want additional withholding. Additional withholding of, let's say $1,000. So that $1,000 will be additional withholding. No, additional withholding, sorry, it doesn't go there. Additional withholding goes in here. Goes in here. So let's have another example. Additional withholding goes all the way at the bottom. So let's make this one. Let's say other income. Let's say you have another income of $1,000 from Uber or something. If you put it there, then you need to adjust. That means you put that $1,000 in here, and then you say, because I'm getting a weekly pay, right? Like this example is weekly pay, right? It says weekly, 1,008, right? So if you have additional $1,000 income and you are a weekly pay, so you say $1,000 here, using my calculator, $1,000 divided by weekly pay of 52. So, no, sorry, $1,000 divided by weekly pay of 52. So it's going to be like $19 or say roughly 20 bucks. So that will be $20 adjustments to your income on a weekly basis. So your let's say 1,008 will become plus 19, so it, or 20, let's say, just round it up. So it will become 1,028 at the bottom, right there. Adjusted wage income will become 1,028. Why? Because $1,000 divided by 52 pay periods, that becomes 20 bucks. 20 bucks plus 1,008, that's adjusted wage income. It will increase from $1,008 to $1,028. But in this example, we don't have any adjustment, so we're gonna easily skip step one. So step one, no deductions, no adjustments, nothing. So still we are, on 1,008. Okay. In step two, now we have to calculate again. And this is this is new W4. Okay, so just remember this is a new W4, and we are going to step two. Step two says, okay, go get your from the withholding rate schedule. Go get your whatever we have to withhold. So go to 2A at the bottom, 1,008. This is a weekly. And this is single weekly 1,008. Okay, so let's go down to see in 2A what do we get. Single weekly and single. Okay, so weekly single, and that will become 1,000. $8 here.
So for the example that you had given us on the quiz, how would I know which one to use if I use standard or W4? If I use the first column or the second column?
Like when you say first column or second column, which one?
Yeah, okay, yes. So on one of the examples, it said, I think it was like, it was the same theory, right? But I didn't know which one to use. Do I use the standard withholding rate?
Oh, from here. So
Yeah.
you're talking
So
about.
It says standard withholding rate, or would I use the form W4 step 2? That's
very good question. Normally, your answer is standard, but let's see what is form W4 step 2 anyway. Okay, let's just figure out what this means. Okay, so let's go to W4 step 2. You see right there? You see that box?
right.
Is that checked or not? If it's checked,
Then you use
have
that
to
column.
use right-hand side. If it's not checked, then it's standard. Okay, but what is this box anyway? Just to be curious, what is it? So here, I'm just reading one of them. If there are only 2 jobs total, you may check this box. Do the same for W4 for the other job. So what it means, it is saying that, oh, listen, we are doing, this is not my only job. This is I have extra other job too, multiple jobs, like something like that. So if you have another job, that means you need to withhold more, because looks like you are making a lot of money, not just from this job, but from another job too. So that's what it says. Here says, click that box. If there are only 2 jobs total, you may check this box. Do the same on Form W-4 for the other job. This option is accurate for jobs with similar pay. Otherwise, more tax than necessary may be withheld. So you can check that if that's the case. Use the estimator for the IRS from IRS website for most accurate withholding for this step. So if you want to go through this step 2 and check this box, you might want to go and look at the estimator to see exactly what you are doing.
Okay, so for quiz purposes, if it doesn't say anything, right, and we're using the new W-4 form, we should automatically use standard.
Yes.
Okay, thank you.
Yeah, and and imagine this is checked. So I was curious too. So I said, okay, imagine this is checked. What's going to happen? So this is what the difference is. I was talking about this, right? I said this is where you are, right there. Right? Okay. But imagine the box is checked. What would happen? If the box is checked,
Your percentage is higher.
Yes, I will end up. What is my, what was my year?
108.
108. Okay, let's go back. So 108, it will ends up to be right here in this area. You see 951 to 1,700, huh? And
Yeah.
then all of a sudden, it's 141.80. Same thing, single, but just because that box is checked. So all of a sudden, they are holding more money from you. $141, because looks like you have, you know, same type of job in about the same amount of income. So they withhold more money from you because of that. Anyway, that box normally, hopefully, is not checked. In our class, examples are not checked anyway. But if you check it, as you see, the tax, even the standard tax, will be 141. But in this case, it's a single. So we are in this area, 108. And it's basic is 1920 plus 12% above minimum. Okay? So basic is 1920 plus 12% above whatever is over 433. Yeah, whatever is over 433. 12% above 433. Okay, so we got it. Here we go. So step 2 is minimum is 433. The base amount is 1920 plus 12% is the extra interest, extra tax. At the top of whatever is above 433, which in this case is 575. So 12% of 575 is $69. $69 additional tax plus 1920 will become what? $88.20. So in this case, if that small box is not checked, it will be standard and we will hold $88. If the box was checked, so we would end up in this box. Instead of $88, we have standards of 141, so it's more than 88, plus 24% anything above 951. So I'm gonna just calculate that quickly. So here we go. I have 1,008 minus 951. It is $57 times 24%. 0.24 equals 1368 plus 141.80 equals 155.48 cents. So if just that box was checked right there, then the tax withholding would be 155.48 compared to 88. It's not double, but close to it. And because there is no additional withholding, where is this additional withholding coming from? From your W-4, where you say, step 4C, I want to have extra withholding. Let's say $100. If you say such a thing in here, then that will end up to be in this last line right there. And $88 plus $100 extra withholding, it would become $188 because you asked for extra $100 withholding. Other than that, if there is no extra withholding on step 4C, then it will be 0 and it will be just that amount, $88.20. Using tables, again, the same thing. What's going to happen? So we are, I did it already here. It's $88, just 20 cents different. But anyway, just look at it. Let's do it. So compare it. So this is a new W-4 and single 1008 weekly. And we want to use tables. So here we go up. We want to use table, but new W-4. So click 7, go to page 7. And again, there is no adjustments here. So we're gonna go to step 2. Adjustments again here is related to step 4A and B. Step 4A and B. Step 4C, additional withholding is always at the end of the worksheet. But step 4A and B, those are where you add or deduct. Add or deduct from your paycheck. How much? Let's say if it's $1,000 and it's weekly, you divide $1,000 by 52 and it ends up to be roughly $20. And that $20 will be added to your income, or if it's in here, it will be deducted from your income. But in this case, we don't have any adjustments. So it's still 1,008. Okay, so we go with 1,008 and we are looking at the table now. We are looking at the weekly and we are looking at the 1,008 and 1,008. I believe that's this one. And it is single, $88. Single, $88, 1,008. New W-4 using tax bracket table, not percentage. Okay, so that's 88. And if you go up, that's where the calculation comes, 88, right there. And in step 3, enter the amount from step 3 of employees form W-4. Let's look at step 3 just so you kind of be comfortable. So step 3, what's going on? Let's say you have one kid. So for one kid under 17 times $2,000, then you have $2,000 here. Perfect. Let's say nothing else. So just 2,000. So you put $2,000 here. Now, the $2,000 in the calculation there, you enter $2,000, but then you enter the numbers. divide the amount, line 3A, by the numbers of pay period. What's your, this is a weekly. So $2,000 divided by weekly. So that will become 2,000 divided by, I believe, let's see, forgot. $2,000 divided by 52. 2,000 divided by 52, it's, is it 2,000? Yes, 2,000 tax credit divided by 52 is $38.46. So if you have dependent, it will be $38 for the 6 cents tax credit. Then here in line 3 says subtract line 3B, that $38.46 from 2A, which is $88. Okay, so $88 minus $38.46, it will be about $49.54. So enter $59.48. And then there is no additional withholding, let's say. So your tax will be $49.54. Why? It was 88. What happened is $49 all of a sudden? Because you have $2,000 credit divided by 52 weeks that you get paid every time. So it ends up to be about $38 credit every week. So instead of $88, they will just withhold $49.53, which is very good. So this $2,000 here will give you a saving of, for a weekly payroll, gives you a saving of $38 almost. And that $38 will reduce your tax of $88. Therefore, you end up just by withholding roughly $49.54. Are we clear on this? But because we don't have any so-called allowance, not allowance, but any dependent, so we just pay the regular $88. So if I add just one dependent here, all of a sudden it will change the situation, but this one is a single. Okay, so just let's do one more. So this one also I updated it. And this is, who is this? Let's see. It's a married person, 5 allowances, and she makes $2,000 semi-monthly. Okay, so married, 5 allowances, $2,000 semi-monthly. Semi-monthly, that means twice a month. What is the withholding? Using old W-4, married, 5 allowances. And as soon as it says 5 allowances, I know it's old W-4. And she makes, okay. So what do? We go to, again, old W-4 percentage. This one, old W-4 percentage. Page 57. Okay. So enter employees' total taxable wages in the worksheet. That's $2,000. Step 1. It says how many allowances they have. It's 5, right? And it says, okay, for 5 allowances, is this biweekly, monthly? What type of payroll it is? It's semi-monthly. So you have 179 in here, in this table, 179. So you continue in step 1. So you say, okay, 5 allowances times 179, it gives me 895. 895 minus the gross payroll of 2,000, it gives me adjusted wage amount of only 1105. Perfect. So that's what I'm gonna calculate for my taxes now. So it went down because for semi-monthly, I get a number of 179 credit times 5 is 895. So I only pay taxes for 1105. So now in step 2 says, okay, go to the schedule, and this is a merit, and this is standard merit. Go to what is this? Semi-monthly merit, and it was down 1105. 1105. 1105 right there. So ends up to be tentative tax, fixed tax of $0. So far so good. Anything above 508 will get 10%. Anything above 508 gets 10%. Standard 0, but 10% anything above 508. So here. So it's 508. Standard is $0, but 10% above 508. So 10% above 508. Above 508 is 597. 597 times 10% is 5970 plus 0 standard. So 5970 plus 0 standard. So it is 5970. Tentative withholding amount. Is there any additional tax withholding in W4? No, there is not. So then the tax is 5970. If you want to use tables, I did it here just to compare. So for table, if you use it, it ends up to be like $60. So this is an old W4 using table, semi-monthly, $2,000 merit. Just to prove, let's go back. So old W4 here, page 22. So you go to old W4 and you work through this worksheet. So the table is semi-monthly, yes, semi-monthly. So go a little bit down to get to semi-monthly. This is still weekly, so keep going. Weekly, weekly, bi-weekly, bi-weekly. Keep going down, bi-weekly, bi-weekly. Still bi-weekly, semi-monthly. Right there. How much was that? Gosh, 2,000, I believe. Yes, 2,005 allowances. 2,005 allowances. Keep going down. Semi-monthly, yes. Always check that, double check that. 2,000 here, that line. 2,000, 0 allowance, 1 allowance, 2 allowance, 3 allowance, 4 allowance, 5 allowance. $60. right there. No additional withholding, anything. So that's it, $60. So it's very close. Cool. So I have a few examples here for you to look at. One more thing that I want to cover is the California, the method A. Let's see, where is it? Calculation using, for California, calculation using the wage bracket, not percentage, which percentage is, again, lengthy. So wage bracket is the easy way to go. So you go to EDD, no, I believe that one. And to see these, I didn't go through this calculation. I don't remember if I did it or not. Maybe I did it, but I'm not sure. But we go anyway. So let's see if that is the page or no. This is the D4. D4. You complete this because for California you need allowances. So let's say you got hired in 2020. You did W4 new version in 2020, doesn't have allowances. So therefore, definitely you need to do D4 for California so you can have allowances. Make sense? What is this one? Okay. So let's look at this. Let's look at this example first before we go there, because the other one I didn't look at it. This is an example in the California withholding method, method A in this document, okay, for 2020, let's say. Okay, let's see how it works. This is an example one, which is good to review it. It says, first in step one, earning for the weekly pay period of 900 are greater than the amount shown in table 1 for low-income families, low-income people. Therefore, income tax should be withheld. So it's saying that in step 1, first check to see if this person needs to be withheld any taxes or not at all. So this guy is getting what? This example, it's getting weekly earning of $900 merit, weekly merit, claiming 5 withholding and allowances. Out of these 5, 3 of which are for estimated deductions. So merit, 2 is for just for them, let's say they're married, but the 3 other allowances that they claim is for estimated deductions. Normal when you claim allowances, you claim allowances for different reasons. So 3 of them are for different reasons. Okay, so 900. Go to table 1, here, table 1, to see if you need to do anything at all or not. So this is, was that weekly or monthly? Let me see. Oh, weekly. So weekly 900. So let's go down. Merit, weekly. How many allowances they have? More than 2. Yes, they do. How much is the minimum? 579. So if it was 579 or less, we would have said, you know what, just forget it. There is no tax. But it's not 579, it's 900. So we cannot say just forget it. We have to continue. Okay, so we continue. Then it says in step 2, how much is the payroll? 900 a week. Good. Merit, 5 allowances. Out of that 5 allowances, subtract amount from table 2 estimated deduction table. Just estimated deduction table in table 2. Okay, let's go to table 2, see what is that. So in table 2 says, how many additional withholding do they have? 3. Remember? They had total 5 allowances, but 3 of them was additional withholding for different reasons. So weekly, 3 allowances, additional allowances, that gives you $58 deduction. Credit, so-called. Not credit, but deduction. Okay, so let's go back. So 900 minus 58 gives you taxable, subject to withholding of $842. So that $58, those 3 allowances that they have, like for different reasons, gave them some help in here. So now is $842 subject to tax, subject to withholding. Step 3, it says the number of withholding allowances claimed, obviously they claimed 5. Subtract number of estimated deduction allowances that they had, so it was 3. So what is the net allowances for tax computation? It's just 2. Remember, for 3, I already gave them some credit here. So we don't need that 3 anymore. We just need to focus on the real allowances, which is just 2. That's okay. Now refer to the appropriate wage bracket table, weekly taxable earning of $842 with 2 actual deductions, allowances, to arrive at the amount of tax. So let's go. This is merit. This is merit weekly $842, 2 allowances, 2 deductions. Okay, so this is weekly. You see that? So weekly, 842. 842 falls in here, right there. Okay, 840 and 880, so 842. And 2. So that line. And the number will be single. We need merit. Okay, this is merit weekly. Sorry. So merit weekly. 842 right there. 840 and 860. You see that? Right there. Okay. So 2, 0, 1, 2. That's the number. 713. That's the tax withholding for California for this person. 713. So go back. And that is why it says 597. Am I looking at a different number? Okay, let me try again. Single, no, married, 1, 2, 842. $713. Am I looking at something wrong? weekly pay period, merit. That's the line, 1, 2, 3. Is it 842? Yeah. Okay, they didn't update that. They are wrong. So it's 713. It's not 597, looks like. Earning 842, 2 deductions for merit weekly. Merit weekly. 713 is not 597. So this is not updated yet, but okay, it is what it is. I don't know. So there is no 597. So it's 713. I don't see any 597 here. Single. Let's go back. This is 2000. This is 2021 EDD 2021. Merit weekly 840. Okay, so based on 2021 is 579. You see that? Based on 2021. So, okay, the previous one was a little bit messed up. It is the table was 2020, but the sample was based on 2021. So this is better. So I'm gonna copy this and I'm gonna change this.
Does it need to be updated in the quiz as well?
Let me do this first before I forget. Give me just 1 second. Let me remove link on this. And now it's a good one. Okay, so now this is the 2021. So let me close this because this is 20. You see it says 20. I'm gonna just close this because the number doesn't come right. So, and so I'm gonna use this one, which is 2021. And the number is exactly 579. And that's where the problem sample gives you that 579 right there. Okay, so we are fine. Okay, so I put that also in the resources, just in case. Okay, so in the example, let's try that just to see if that example comes right or not. In module 3 for California, there's an example here using bracket, and I just changed that. So if married couple claim 5 allowances, there are 2 personal allowances and 3 additional allowances. Makes sense? 2 personal because married husband and wife, and the 3 are for additional reasons. So we can't use remember that one. The additional allowances are used to calculate the dollar allowance reduction. So like the $58 that we just did. The personal allowances are used to calculate withholding from the wage bracket. So that's how in California you separate that 5 allowances into 2 pieces. You separate the personal with the additional. So personal will be used in the tax bracket table, but the additional will be used just to give you a little bit of allowance reduction, like $58 in that example. So a married person is paid $900 weekly, claim 5 allowances. That's, I believe I changed this myself. So let's just see. Assume there are 2 personal allowances and 3 additional. That was the exact thing we did. Check to see if earnings are too low for withholding. If so, stop. Withholding is 0. In this case, the minimum is 526. I'm not sure about that. I think it was different. The minimum is 587 based on 2021 version. So I'm going to change that a little bit. So let's edit that. That's 528. I believe I changed this, but the reason I'm wrong, because I looked at the wrong one. 587. 587. So that means is 900 is more than 587. We're gonna just skip step 1. This guy needs to be withheld some taxes. So go to from table 2, look up at the amount of 3 additional allowances, and you end up by to see that $58 needs to be deducted. So calculate the allowances. So here 900 minus 58. So $842 is the taxable amount here, taxable amount. Look up the tax for this amount with married weekly 2 allowances. It is not 713. It is, as we just looked at it at that example, it's 579. So let's fix that. It's based on 2021, 579. That's it. Save. And that's the bracket method, okay? The other one is percentage method. I'm not gonna put time on this. If you wanna look at it, but it's too much time consuming and I don't have time for this. So this is the one that at the minimum as a manual payroll so-called you need to know, and that's good enough. And you're gonna use the same thing, bracket method A for your project. So project will be used for California using method A. And in the quiz 3, I believe that you just mentioned, I thought it was quiz 2, but in quiz 3, I deleted anything that says use method B for California. That's too much pain. It's useless to waste energy to do something that you're never gonna use it. So here we go, method A, and that will be tested in your quiz 3.